So here's the question. Can a pharmaceutical giant, one that's 150 years old, really act like a Silicon Valley startup? We're talking billion-dollar AI platforms, gene therapy deals. Is what Eli Lilly's doing genuine innovation, or is it just really expensive window dressing? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're doing a deep dive into Eli Lilly, ticker LLY. This is based on data captured just this morning, September 9, 2025, 08:33 a.m. ET from our research. Our mission, as always, is to pull out the key insights from that research on LLY, and we'll figure out what it really means for you. Okay, let's maybe start with the bigger picture. The market looks initially optimistic today. NASDAQ Q futures are ticking up slightly, but it does feel a bit delicate, doesn't it?
It really does, yeah. And what's fascinating when you look into our research is that while the headline GDP numbers, they look okay, growth is there.
Right.
There are some pretty significant issues underneath. We're seeing youth unemployment ticking up.
Yeah.
Consumer spending is kind of flatlining. And the job market, it really seems propped up mostly by healthcare and, hospitality. It's sort of like having a car with a shiny new paint job, but an engine that's sputtering. Creates a really uncertain backdrop for basically any stock.
That's a great way to put it. So if the general engine is sputtering, how does that impact Lilly? Does their focus on specialized healthcare maybe make them, more resilient to these headwinds?
That's exactly the dynamic.
Yeah.
For Eli Lilly, while, general consumer spending might be tight, the demand for their specific, often high-cost treatments, think obesity drugs, for example, tends to stay pretty strong.
Ah, okay.
It's often driven by medical need and, crucially, insurance coverage. So it acts as this surprising buffer against that wider economic uncertainty we're seeing.
Got it. Okay, and here's where it gets really interesting, kind of pushing that innovation versus window dressing point again. Eli Lilly isn't just playing the old game anymore.
No.
Our research highlights some really big strategic shifts. They've launched TuneLab, this AI drug discovery platform built on machine learning, supposed to speed things up massively. And it's backed by, over $1 billion of their own research data. Plus, they're doing deals in brain health, next-gen gene therapies for obesity. They seem to be really pushing forward.
Oh, absolutely. And Wall Street is definitely paying attention. Analysts, overwhelmingly positive. You've got over 70% buy ratings and 0 sell recommendations, which is telling.
0 sells.
Although it's worth mentioning, some strong buy ratings have been sort of quietly nudged down to hold recently.
Okay, those downgrades.
Yeah.
Is that just people taking profits after the stock's run, or is it maybe a hint from some analysts that perhaps this innovation premium is getting priced in a bit too early? Back to that window dressing idea.
That's a really sharp point. A lot of it likely is profit-taking, yes, but it probably also signals a bit of a quiet reevaluation. Our research suggests that while platforms like TuneLab are revolutionary, the actual measurable impact on drug discovery pipelines, that often takes, 5, maybe even 10 years to really show up in results. So yeah, some of that premium could be based more on future hope than immediate proven outcomes right now.
Right. So what does this boil down to for you, the listener? I guess the core issue is valuation, isn't it?
Exactly. It's stark.
Depending on how you crunch the numbers, Lilly is either a total bargain EPS model, suggests it could be worth over $1,000, or it looks wildly overpriced. A free cash flow model puts it at just, $52. And it's trading around $738 right now.
Yeah, a huge gap.
So this isn't just numbers on a page. It really highlights that fundamental clash, right? Between traditional value investors seeing maybe $52 and the growth believers pricing in those AI miracles way down the line. The key thing for you is knowing which perspective you're bringing to the table.
And if we shift gears to look at market sentiment, what are traders betting on? Well, the options market is clearly bullish. Very low put-to-call ratio, 0.41. That signals a strong bias towards upward movement. Key levels we're watching. $745 seems to be the target on the upside. Defensively, you'd look at $720 as support. And short interest, basically non-existent, just over 1%. Very few big players are willing to bet against this story right now.
So putting aside the talk and the bets, what are the charts actually doing? Let's, cut through the noise. The short-term trend looks positive, definitely climbing upwards steadily.
Yeah.
But there is a longer-term kind of caution flag on the chart that hasn't quite gone away yet. Volume, though, that looks strong. Our indicators are showing pretty sustained buying, accumulation by the bigger players.
Money flow supports that.
Right, money flow, momentum's picking up. The engine is revving, technically speaking,
Yeah.
but interestingly, volatility is actually shrinking. It suggests the stock is kind of coiling up, like a spring, maybe before a bigger move.
And if we tie all those threads together,
Yeah.
the innovation news, the analyst views, the options market, the technicals, our final analysis does point towards a bullish outlook. The company's news flow, that AI platform, the gene therapy, it's a powerful catalyst. It seems validated by analysts and options traders. And the technical picture, like that money flow and momentum, it really backs up the story. It looks like Lilly's innovation engine is, for now, winning out against those murky economic headwinds we talked about earlier.
So for the next few trading sessions, keep an eye on that $745 level for a potential breakout. And $720 is the line in the sand for support. Look, Eli Lilly is definitely pushing the envelope on what a big pharma company can be, and the market. It seems to be buying the story hook, line, and sinker. But, as the stock sits near its highs, consolidating, the question for you remains, is this a launch pad aiming for the moon, or just a very, very expensive pause while everyone waits for that innovation to actually pay off years down the road? That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.